Forex Focus brought to you by IG, taking a look at the most volatile Forex pairs to trade, the 10 most volatile, that is. And before we do rank these pairs, I want to give you a guideline of how we are measuring volatility and what that means for you, because I think volatility has a couple different sides to it, and depending on who you're asking, it's a good thing or it could be a bad thing, because volatility pretty directly represents risk and reward. If a market is more volatile than itself in the past, let's say, then that can, provide opportunity to someone who wants to take on risk, wants to trade, let's say, but it could also provides risk to both types, but it could provide a greater risk to someone who doesn't want to take on risk, someone who's a passive investor, isn't a day trader or a swing trader, a more active speculator in a given market. And so there's the two sides of that coin. And then also here are a couple of attributes. One, volatility is directly, pretty much no matter how you measure it, it's almost always going to be a measure of how much price tends to move. And today we are measuring that in a pretty standard way, I would say, which is by looking at the average 30-day realized volatility for all the different pairs that we're looking at here today over the last 30 years. And you'll remember that, implied volatility, the VIX index, for example, and how the S&P 500's volatility is measured is a 30-day implied volatility, taking a look at options prices. And here for our conversation, I thought, okay, that's all well and good, but that's, what people think will be the volatility in the future. Let's take a look at what's been volatile in recent years. Another attribute here is that volatility can have an inverse relationship to liquidity, which is to say, if a market is, for example, the euro versus the dollar, if that Forex pair is today much more volatile than it was yesterday, let's say the ECB cut interest rates by 100 basis points and the euro is moving around like crazy, there's probably going to be a little less liquidity than on a normal day or a less volatile day. As you might imagine, if there's more volatility, that usually means there's probably more unknowns in that market. The price is moving around because people are like, what's going on? Where's this going? And the major institutions that are making markets probably have to widen out their bids and offers, because not even they know what this market's capable of if it's really, really volatile. And so you want to find a good combination of good liquidity and volatility that offers opportunity. And today we are looking at major US dollar based Forex pairs. So they're pretty much all going to have solid liquidity, but they can become illiquid in highly volatile times. And then finally, this changes, right? And we've seen this recently. The euro market, again, for example, can have years of 10, 12, 13% volatility, and it can have years of 4, 5, 6%. This can change. It does change daily, although it's usually only changes by a marginal amount on a daily basis. But it can vary very widely in the long term. In a given year, that volatility can really change. So let's take a look at our rankings here of these major dollar-based pairs. And you see a bunch of relationships play out in these top 10 most volatile. First, the South African rand, Australian dollar, New Zealand dollar, definitely, in my mind at least, those markets do kind of not track each other necessarily, that they all are moving up or they're all moving lower, although Australia and New Zealand very obviously do have close ties geographically and economically. But the three of them I would consider more, commodity currencies, more volatile currencies for sure, as opposed to, you get into the middle of that and you see the pound, the yen, and the euro and the Swiss franc in there, four currencies that established economies for centuries, and currency relationships that have been established for decades, if not centuries, and don't have necessarily as much specific risk, let's say, to one portion of the economy, very diversified economies, that's to say. And then we close it out with that Canadian dollar and Singapore dollar, the least volatile actually of the last couple of years, which may surprise some. But let's dive into the volatility of each of these, starting with the South African rand that has been very, very volatile and kind of under the radar for me, because I would have totally expected Australian dollar and I would have expected Japanese yen to be some of the most volatile markets the last couple of years. South African rand not talked about as much, but this is a market that right now the average volatility for the last 3 years has been 13%. And in the last 3 years here, the rand has lost more than 20% to the US dollar. So big move as a whole, large volatility on average as well, 13%, that's almost the average volatility of the S&P 500, a stock market that obviously is usually viewed as being more volatile than a currency market. And the high to low move here from below $14 up to close to $20, that's almost a 50% move, which is really quite large for a dollar-based pair with an established economy like South Africa's. And so getting some of the biggest movement in that pair. But right behind it is this Australian dollar, lost 12% over the course of the last 3 years, has traded close to, if not through, 60 cents in the last number of years here. It's been a historical low that it's been able to bounce off of, but it has traded through there. And this is a market that has traded up to 80 cents. And like I say, down to 60 cents, pretty big range, and moves often in a correlated fashion with stocks, and especially with the, Chinese economy. Australia very closely tied there, which is to say it's near its lows for the last handful of years. And right next to it is the Kiwi, the New Zealand dollar, which you might expect, these economies so close to each other, so intertwined. And as you can see, there is a pretty solid correlation between the two. As I flip back and forth, the price action over the course of the last 3 years, very close. That being said, the New Zealand dollar is right now trading either through or near 60 cents there, and has around pretty much the same volatility as the Australian dollar at 9.5% versus 9.6%. So in a scenario like that, if you're going to trade, if you're trading both of them, you're pretty much trading the same trade twice. So maybe good to focus on one versus the other. I know a lot of people will focus on that Australian dollar, although New Zealand can have its own news every once in a while that's moving its currency. There in the 4 spot is dollar versus Mexican peso. And I thought this was interesting that the peso is actually one of the only currencies in our list here that has appreciated versus the dollar to the tune of 13%. But that was after many years of depreciation leading up to 2020 there. And right now, dollar peso trading near 17. That is, if you go historically, widen out the lens, at the higher end of the range, even though it's at the lower end of the range the last couple of years. Either way, pretty volatile pair in here is traded up to 22 and now down below 17, although it's a little bit higher than 17 now. So decent bang for your buck there in terms of volatility. And now is where you see a pretty significant pullback from those first 4 into the pound, euro, yen area, where volatility is now under 8%. That rand was obviously pretty crazy up there at 13%. but that New Zealand dollar, Australian dollar, peso were all around 9%. Now we're in the 7% range, and pound only down around 7% versus the dollar in the last 3 years. It did see a significant drop all the way down below 105. But it has only really had a high to low range of around 25%, from 140 down to 105. Small relative to some of those other currencies. Now, here's one that I was really surprised by. Yen has seen a huge move over the course of the last 3 years. Yen has lost more than 40% of value to the US dollar, but has the same volatility as approximately the same as the pound or the Swiss franc or the euro here. As in the 6 to 7% range. And that's because these currencies, they can trend to historical extremes and see large moves over the course of years. But what this tells you is that on a 30-day basis, not seeing a huge move at any one given time. And that might make sense. An Australian dollar might see, a 10%, 15% move in the course of 30 days. Here with the yen, in the course of 30 days, not seeing a huge percentage move, but over the course of years, you can see a large move. So not particularly volatile in a shorter term, but can exhibit large moves. Same with the Swiss franc, very low volatility relative to some of the other pairs at 6.7%. But it has traded below this historical extreme with the dollar of around 90 cents. It's gotten all the way down to 86. So historical extremes, but not so volatile. And of course, the euro saw parity in 2022, but again, on a week-to-week, month-to-month basis, only exhibiting a 6.6% volatility. And over the course of the last 3 years has only lost 10%, even though it's you've seen so many headlines of the euro losing value, getting down to parity. Dollar CAD, you might have expected this one to come in relatively low volatility. Obviously, the U.S. and Canadian economies very closely tied. The U.S. and Canadian central banks have been also very closely tied with their interest rate activity. But keep in mind that Canadian dollar will move a lot with crude oil. And so that can at times present very volatile moves. When crude oil is rallying to extremes, dollar CAD can be moving lower and vice versa. When crude oil is falling, dollar CAD can be rising. So that will present volatility from time to time. But over the course of the last couple of years, one of the lowest volatility pairs. And then rounding out our top 10, dollar versus Singapore dollar, under 4% volatility over the course of the last couple of years here. And you can see, though the price action looks big, this is a market that 3 years ago was trading around 135, got above 140, got down to close to 130, but hasn't really broken out of that 10-cent range. And so not as volatile as some of the others. But there's your top 10 most volatile Forex pairs.